industry for the automotive sector. So Suprajit Engineering is the company that I'm talking about. Q2 was a bit of a muted quarter for them because they were struggling in the export business. They witnessed a decline in their revenues and in their margins. The overseas performance was impacted. We have K Ajith Kumar Rai, who is the founder and chairman at Suprajit Engineering, who joins us now to talk about that. Mr. Rai, thanks a lot for joining us. You know, there was a worker strike in the US. There was some weakness in your non-automotive division as well, because of which your overseas business was impacted. I understand that. But there was barely any growth in your top line. Your margins also were, slightly under pressure year on year. What's the outlook for the second half of the year? Do you see any recovery?
Good morning, and thank you for having me on your channel. The first half of the year has been a bit challenging, as you rightly said, for our international business. For a quick update, I think the domestic cable division grew in line with the industry. The margins have been in the high teens. The challenge has been in the controls division, which is our international business, due to the high interest rates, recession, non-automotive business having certain challenges, China relocation. They have had the challenges for the controls division, and that's why that division had a muted performance. Whereas both Phoenix Lamps division, which has been our halogen lamps business, had turned around nicely and had a double-digit margin. And our electronics division had a beautiful growth, and for the first time within a year of its establishment, has turned into a positive EBITDA margin. In terms of how it looks for the second half, I think the domestic cable business will continue to give a strong performance. So will the Phoenix Lamps division, and electronics division will continue to be growing very fast with growth in margins as well. Controls division will continue to have another challenging half year as we see. But overall business will grow, and margins will be in line with what we have seen in the recent past.
Okay, I want to talk a little more about the controls division because this has been giving you trouble for a while. In fact, in this quarter, the EBITDA for the controls division was down 7%. And I remember the last time you had said that, there is this ongoing restructuring which is taking place, which is putting pressure on the margin performance. How long will it take for the restructuring to be completed? And once it's done, what kind of growth do you see in the Suprajit Controls division?
I think first of all, let me make a point that global business in automotive is typically in single digits, high single digits. We are somewhere there. Of course, there is certainly a room for improvement. In terms of restructuring, I think now the recently acquired LDC from Kongsberg, our Suprajit Automotive, Suprajit Europe, as well as Westcon, is getting integrated in a sense. I think that work is probably another 3 to 4 quarters to complete it. So in terms of business wins, we are continuing to win some strong business in the automotive space. So the growth will be there. Margins will be, you mentioned the number. Hopefully it will improve over the next 2 to 3 quarters.
Okay. So another 3 to 4 quarters for this LDC restructuring to get completed. So is it fair to assume that it will take you another 3 to 4 quarters for the margins to get to double digit, right? Overall margins I'm talking about.
The overall margins, yeah, I think so, because that is the drag on our numbers. The other 3 divisions should be doing pretty well. And once the restructuring is completed, the controls division, we should easily and comfortably, get into double-digit margins. We are almost there. We are at about 9.5%, as I know. I think getting into double-digit is not really such a challenge.
All right. Hi, Mr. Rai. Good morning. In the past, you've done 12 to 13% margins. So the second half of FY25, do you think you get back to those levels?
No, as I said, on a consolidated basis, the margins will take some time to recover. On a standalone, you are right. We'll be in 15-16% EBITDA.
Okay. All right. I'm just looking at your press release that you last put out. You'll have done some outright purchase of industrial property in Jigani industrial area. I think that's in Karnataka. And that's an industrial belt as well out there. Could you tell us how much of money have you paid for this? What is the end use of this land? And you're going to be setting up something. So what would be the revenue potential?
The industrial land is measuring about 4+ acres of land with about, I think, 70 or 80,000 square feet of built space. And that's in the Jigani industrial area, which is a prime industrial area within Karnataka. As you know, we have been talking about Suprajit Technology Center, and we are working on certain new products, which is beyond cables, which we are in the late stage of negotiation with some of our customers for a commercial exploitation. So the plan is to convert this industrial land into after doing necessary, upgrade and renovations that is required to be done. We are expecting to put to use for one of our, or maybe more than one of our, non-cable products into commercial production.
In fact, I wanted to talk a little bit about these new products, the instrument clusters, sensors, other electronic products that you're getting into. The last time you said that your content per two-wheeler will go up because of this. And you also talked about 50,000 rupees per unit at some point in time. Can you just, revisit those numbers? What is the content per two-wheeler currently? And how much can you raise it to?
I think, I don't know where the 50,000 has come. Let me make the point clear. And if you look at just the cables as a content per vehicle, maybe it's about 100, 150 rupees, 200 rupees maximum, or let's say 4 cables or 5 cables in a two-wheeler. What our stated plan now, or our goal is to increase that. And that's where these new products come into picture. For example, an electronic digital cluster will cost anywhere from, let's say, 700 to 2,000.
Yeah.
Simple electronic throttle controls will be 400, 500 rupees. A electronic actuator for seats or locks will cost 300, 400 rupees. So our plan is clear that the content per two-wheeler will increase going forward.
All right, Mr. Rai, very quickly, the Phoenix Lamps division, that out there the margins have improved to around 12%. So two-part question. One is, can margins hold on to these levels? And the second point, I just want you to clarify, at times people have spoken about possibility of you selling this unit. That's not happening, right, since it's turned around so well?
Let me answer the second question first. Absolutely no plans. I think it has been doing beautifully. A phenomenal success story, I would say, from a low single digit. We have converted into a double-digit margin business with a growth potential.
Okay.
All right. We'll leave it there, sir. Thank you very much for your time. Good speaking with you.
Thank you.
And it's a pleasure.